So, welcome back at today's conference and panel discussions organized by the National Bank of Slovakia. The banking sector, as we already mentioned, is facing both risks and opportunities related to climate change and sustainability. On one hand, the impacts of climate change and transition to a low-carbon economy present significant risks to the financial sector. On the other hand, there are also significant opportunities. To effectively manage these, it's important for banks to have a comprehensive understanding of their exposure to climate and sustainability risks. We will start our afternoon session with a keynote speech. So let me invite to the stage Mrs. Deborah Revoltella, Chief Economist of European Investment Bank. This is your place. Thank you.
Thank you very much, and it's really an honor to serve as a keynote speaker to start this afternoon session of the conference. And today was already, the morning was already extremely interesting. So I hope with my speech to bring a little bit of additional element for the discussion, and later we will have another great panel to continue. What I'm going to talk about is related to a study that actually we are publishing today from the European Investment Bank. Every year we look at the investment situation in all over Europe and also in specific countries. And we have a specific survey of European firms with a specific angle on Slovakia. That is the one that I'm going to detail today. And what I wanted to bring to the table is a few new data on the investment outlook and specifically what the whole period of crisis means for investment and green investment. And I think a lot of what we heard already this morning, you will find very familiar in the data, probably because the same people who were talking today in the panels were also involved in the survey. So where do we stand up? I will start with the macro environment and then really looking at a Europe level overall, and then looking at what does it mean for Slovakia in the context of the overall Central Eastern European region. And the main message that I want to give, and it's a common message for Europe, it's that we actually are in a period where there are huge investment needs. The investment outlook may not be the most favorable for investment activity to take place. So there needs to be actually a cohesive policy framework in order to make this investment happen, and particularly on the green side. And you may be surprised to hear it from an economist in a bank, like in the European institution like I am. It's not only finance needed. There is a lot that is related to the regulatory context, the barriers to investment, skill needs. So all of this has to come together to have this investment happening. And this is particularly true for green investment. So where do we come from? At the macro level, and that's Europe overall, we come from, and it's a bit economist talking as I explain you the concept, don't focus too much on the graph. But what we see is that we come from a year with a huge term of trade shock. The term of trade shock has been, you can think at it like it's a loss of wealth at the European level that somehow has to be redistributed at the economic level. And where we come from, and that's the interesting part on the second graph, that is the net lending position of a different economic sector. What we see is that basically we come from a longer period in which the general government, the government sector was the one that was borrowing and supporting the rest of the economy. But that comes with, at the European level, a lot of public debt also that has been developed. So the challenge is how to manage this new term of trade shock, leveraging maybe a little bit less on the public sector because the capacity of the public sector to continue to support the rest of the economy is reducing. So that's where we come on the macro point of view. And then the second point is again a European level, and that's bringing more the focus on the medium to long term. What we see is that in Europe, we actually have structural issues that are there since a long time. It's not only the matter of this year, and that call for more investment to happen. The first graph is it's a graph that we started producing a few years ago. And basically, we take out from total investment, we take out the residential real estate. Not because it's not important to have it, but it's less productive, it's less focused to the long-term productivity of the economy. And then what we see is that if you look at the EU versus the US, you have a gap of some 2.5% of GDP per year. You multiply it for the 14 years that you have this gap, is a huge gap. And very much is coming from machinery and equipment, ICT, innovation component. So it's really the part of the economy that allows the economy to grow more in the long term, the productivity part. And that's something that we should worry about. And we call it really as do something for investment, make investment happen. That's one point. The second point is coming here, and it's coming from our survey of firms. We look at firms investing in innovation. So we ask firms if they adopted a new product or processes, and we ask even where this is coming from. Are they new to your company, new to the country, or new to the world? So it can be also adoption of innovation. What you see is that there was always a gap between Europe and the US, but it opened it even more now. So at the end, even on the innovation part, the gap with the US is increasing. And that's scaring if you care about productivity in Europe, but it's even more if you think at what's happening on the right side, and that's are the investment needs for the green transition. We know that there are huge investment needs. Actually, there are various estimates, but in this estimate from one of the scenarios from the Commission, what we see is that actually we pass from some 700 billion of investment need to some more than 1 trillion per year. There is a gap that has to come, and that means more investment to happen. And all of these, so these huge investment needs come in a period where the environment for investment is not so positive. So what do we look at? I skip this, but I go directly to Slovakia. So here you look at Slovakia, you look at the gross fixed investment, you see the first COVID shock, you see Europe actually recovering. If you take out Ireland, that is always a lot of a one-off, but Europe completely recovers. But then you see Slovakia. Slovakia remains lagging behind. It's recovering, but it's lagging. So on the Slovakian side, there is something on the investment that is even more challenging than what we see at the European level. And then we know that at a European point of view, we have a very good thing that came out from the pandemic. That's the Recovery and Resilience Facility. The Recovery and Resilience Facility is very interesting. If you think as an economist, it's a way to guarantee that the government cannot shade away from public investment at time of consolidation. You guarantee a pot of money that are pre-committed, and some are grants, some are loans, to execute certain projects, and that are locked in. You need to do it, otherwise you don't get the money. Slovakia has been moving in the direction. I think the focus I learned that is much more on the energy, on the climate and energy efficiency side. That's quite good. The success so far has been very much on the reform, the reform needed for releasing the funds, which is again very good. But we still see that the executing investment is taking more time. And why is it taking more time? And that's, I go to something that we see quite common at the European level. So I was speaking about the survey we do on firms. We also have a survey of municipalities. And what we ask to the municipalities, that's Central Eastern Europe data, but it's exactly the same for Europe. So if you ask to municipalities what's the main impediment, they would say finance, but then you have a lot of other factors, regulatory process, regulatory uncertainty, technical capacity, technological uncertainty. And here is the ones saying that's a very important, it's a major constraint. And you see a lot of these happening. So it's not only the financing side, it's the whole part that people talk about skills on the one side and talk about barriers to investment, regulatory barriers. But on the technical capacity, we were even looking more specifically on which skills do municipalities lack in Europe in order to conduct this investment? And what you see is that really engineer and technical skill and environmental and climate assessment skill really top up. So it has to do with the capacity to execute this investment. And you cannot get out of it. If you don't have the capacity, you can have all the finance you want, but you will not have this investment happening. Or at least it will not go in the right direction, the execution of the investment. So we really think that there is a lot to do in terms of skills and on climate as well. And I think we will discuss it more in the panel later. I move to that was on the public sector point of view. I move to the private sector and I look a little bit of what is happening to the firms' point of view. And here, what we look at is in the survey, we are quite detailed, and if you want, you can download from the EIB internet site the report. What we look at is we ask firms if they have been transforming in the last year because of the major shock they passed through. On the one side, COVID, on the other side, supply chain disruptions, and what they have been doing. We see that the patterns actually are relatively similar to the EU, but less in Slovakia. So at the European level, we see that actually the COVID crisis and the policy support associated to it allowed firms to transform and become more digital. It's also true in Slovakia, but much less than at the European level. Even if, and is not in the graph, but Slovakia picked up very much on robotization. So on robotization and platform, actually, the level of digitalization in Slovakia is quite good. On the other side, there has been a low transformation related to supply chain or new product and processes. So that's a part of some lagging transformation of the corporate sector. If we look at the other graph, is looking at the composition of investment by different kinds of assets at the company level. And what you see is the top color from the blue on top. This is what we economists call intangible investment. And what you see, it's in Central Eastern Europe overall, but in Slovakia, again, it's quite compressed, this part. So that's really the part that allow the companies to become more innovative and to transform faster. And that's, again, something that is a sort of concern. If we look at barriers to investment, and that's, we have a question every time asking what are the long-term barriers to investment for your firms, for your company. And then we have, here you see Europe versus Slovakia. The dots are last year observation. But what you see is very much energy costs are the top impediment. And that was growing very much. We know all the energy crisis coming up. And that was a major constraint. Other constraints that are quite important all over Europe, uncertainty and availability of skilled staff. So it's the combination of these three elements that is really dictating what will happen to investment and actually showing that there are constraints. And then one thing that we try to do, and that is more coming from the European side. Overall, we were trying to actually assess, even econometrically, what's the impact of these different factors, and particularly uncertainty on investment. On the first, we actually see that the probability that firms reduce investment If the firm is answering to the previous question that uncertainty is a major impediment, is 22%, so the probability increases by 22%, and the large firms are much better in dealing with this uncertainty than small firms. But the second part, I think, is very interesting for the discussion today, is our a priori was if energy costs increase, as a firm, you should think about investing in energy efficiency. This will make you gain out of the situation. But what we see is that actually being concerned by energy cost increases the probability that a firm invests. Uncertainty reduces the probability that a firm invests. And then the interaction between the two makes uncertainty prevail. So we have, even with the energy crisis coming in and high energy costs, we have less investment in climate energy efficiency than what we would like to see. So here it's really like the crisis and the uncertainty in the market that we have is penalizing investment overall and is penalizing investment in climate and energy efficiency in particular. I would just keep actually, if I can go back. Finance is not the main constraint of firms. Yes, it's true. Interest rates are increasing, but still financing is not, at least what the firms tell us, is not the main constraint. Here we have the reasons behind finance constraint. We see that the firms in Slovakia tend to be similar to the European average. There are some sectors a little bit more affected, and there are some firms, particularly in service and a component in the larger firms, that are called discouraged. So they, in fact, don't go to the bank asking for credit because they think they would be turned down. So, but in fact, access to finance is not a major constraint, but the situation is evolving. What we see, and I will go fast because I am using a lot of my time, we see from the bank side that banks are actually, okay, I'm moving too fast. That banks are actually, they find more credit constraint or the credit side. These are all factors that show that the supply of credit, banks are tightening a supply condition, both for domestic and international factor. And also, this graph also show that banks start to think that there will be a deterioration in credit quality, even if in Slovakia we start from very low level of NPL, so it's some deterioration, but from very low level. But that's just to say that credit conditions are not so tightened at the moment, but we expect some tightening to come. And then I go to climate risk, and here are a few data that I find quite interesting, because actually you can compare Slovakia with the EU and the perception of firms on climate risk. The first one is we ask firms if they have been impacted by physical risk, so the climate physical risk, that can be the chronic or acute climate risk. And here you see that there seems to be a lower impact of physical risk perceived by Slovak firms versus the EU. There is a little bit of a variation by sector. What I find interesting is that SME perceive much less. Frankly, if you are located in the same area, there is no reason why you should perceive less. If there is a flood, you get it as the bigger company. So probably it's a matter of awareness, this, and that's a signal. The second point is we ask firms if they perceive the transition risk. The transition risk, we describe it is regulation is changing, and you will be allowed to do certain things, and other you will not be allowed to do, and you will have to transform, etc. How much do you think this represents an opportunity or a risk, or you don't know for your company? What you see is a lot of a blank, so the residual in the graph is the I don't know. And there is a lot in Slovakia, so a lot of a lack of awareness on the business point of view. But then what you see is that there is a lot of orange, those are the guys that perceive the risk, and very little of the green one. Those are the ones that perceive the opportunity. And here, also on the large firms and small firm side, you see a lot of seeing the risk. I see very much this related to the industrial specialization of Slovakia, with a lot of hard-to-abate sector, a lot of the economy locked in. But what I find, if you want, scaring is the fact that if you perceive the risk, but you fail to act now, you will not catch also the opportunity. And that's where moving quickly, realizing the risk, and starting to act is quite important. And I suspect that we will come back to that in the panel later. I come to the last point. This is, we ask firms if over time, so it's a kind of a stock measure, if they took action to invest in mitigation, or invest in adaptation, so to adapt to the consequence of climate change or to try to mitigate. What you see is, if you look also at the EU number, overall, very little is happening in terms of adaptation. At the European level, there is the perception that, I don't know, if there is a flood, it's not you as a company that have to protect yourself from the flood, it's the municipality that has to protect you from the flood. So it's a lot of perception that it has to come from the public sector. I think it's a combination of the two. In Slovakia, there is a lot of taking insurance. I insure myself against that. But then the flood will still come and you will be destroyed. You just have the money to rebuild. The other part of taking active measure, adaptation strategy, or taking active measure is very much less coming from the private sector. And that's it's all over EU and Slovakia. It's not Slovakia is an exception, but that's quite important, and it's probably in the diffusion of knowledge, trying to bring the message that adaptation should also come from the private sector point of view. And then on the other side, investing in mitigation, there is a much going on in terms of waste minimization. I think that's coming. In all the other elements, Slovak companies are much less active than the European one, even in things like renewable energy, energy efficiency, and the sustainable transport. The last one is particularly interesting, and there is 20% of firms in Slovakia saying they do it. Basically, there we are asking if your technology is a really polluting one, are you looking in less polluting technology? And you have very few firms doing it, even if, as we were saying, there is a lot of activity in hard-to-abate sectors. So I come to the end. I hope my message is coming across. We really need to do something on investment. We have a lot of investment needs, and they are related to competitiveness, but also to the green transition. There is, to have this investment happening, I think it's not only policy support in the sense of more financing, it can help, but there is a lot of dealing with everything else that is blocking investment, reducing uncertainty, and then maybe risk sharing helps. But also trying to have this complementarity of public and private investment that enhance the return on private investment. That is something quite good, and giving a direction in terms, I think a very clear direction in terms also in green investment for the climate and transition. Removing barriers to investment, red tape, the importance of skills and innovation. I think skills is incredibly important. And then a last message that I think is a lot of the policy debate we are having in Europe today is that the solution should not only be national level. I think in Europe we have the huge opportunity of the single market, and that's the one that we should try to develop. With that, I close the keynote speech, and I think we move to the panel.
Yeah, thank you very much. This is Deborah Revoltella, the Chief Economist of European Investment Bank. You will stay with us. You can take a seat right now. So, as we heard, the transition to a low-carbon economy and investing in renewable energy will require substantial investment and financing, which means not only financial institutions, but also governments will be required to rethink their financial models. And to discuss this topic even further, let me ask Deborah to host our next panel discussion, and let me invite our next participants. Livia Vašáková, Director of Recovery Plan at the Office of Government of Slovak Republic. Zuzana Koštialová, Board Member of Tatra Banka, and Daniel Gašpar, Managing Partner at Crowdberry. Welcome, good afternoon to all of you. And I think Deborah will have a sip of water, and we can start with a panel discussion number 3 today at the conference. Enjoy. Thank you.
Thank you. Thank you very much, and I'm really happy to chair this panel. And I just wanted to notice that it's a very diverse panel, actually a bit not too diverse, because now we are in the minority.
Finally.
And I think that this will help not only talking about the problems, but also bringing solutions. And that's the rule that we will have as women in the panel bringing forward. But I'm very happy to have the opportunity to chair this discussion. So I think we have quite a diverse panel. I think we had the first panel mostly only bankers, the second panel only companies, and now we mix all together a bit, and we also have the public sector here. So what we wanted to achieve in this panel is to discuss on what does it take to have not only investment, but a green investment happening in Slovakia in particular, how Slovakia positions. And we have 3 different points of view. We have the point of view of the banker on the one side. We have the point of view of venture capital markets on the other side. And then we have the point of view of the public sector with Livia. So my first question would be for Susanna. And Susanna, what is the role of bank in making this climate investment happening? And what are you doing to make it happen on the financing side and the bank side?
Thank you, Deborah, for the question. The answer is actually not the easy one. The ESG topic as such is, of course, extremely complex. The banking industry is one of the most regulated industries, and therefore it is, of course, only natural that it requires from us, from banks, to be much more complex, prepared much earlier than the other stakeholders. And basically, in my opinion, the main role of the bank should be to build the awareness, to really provide the conditions towards our client where we can really support them, help them, and guide them through the process, which is already here, and but many obstacles are still present. We can discuss it later on. But key role is to really be the role player. And if I may just mention one concrete example, I think, for example, in our case, in case of our bank, the ownership of the topic as such is extremely important. And if it's driven top-down from the top management, which is our case, this is definitely extremely helpful. I also see in daily contact with our corporate customers that once the owner is owning the topic and is having climate change and incorporation of this type of risks as the first strategy point and on the top of the list, then the transition towards green is much more easier.
Can
Basically, yeah.
Just interrupt for a Second, for all the sound-conscious people,
Okay.
I will need to do a little bit of this
Magic.
here, the magic probably. Is it okay now? Že keby ste si dali dole šál, možno to bude lepšie pre nás. We're thinking, it's just the sound issue, really. Okay, yeah.
Je to lepšie?
Je to v pohode teraz. Asi keď do toho ani do kabela nejakým spôsobom tam nie je nič zamotané. Okay,
better.
perfect.
It's okay.
Everything is solved. Continue.
Okay, and maybe one more point. What is important, it's not only about internal education of the customers, but the whole chain, what the whole chain means. Basically, it starts from the physical individuals, from the private banking clients, investors into funds, the suppliers of our top big customers. And from the daily experience, I can say that the topic is not yet so frequently and heavily present. So it's our role to really support, educate, and try to really persuade also, for example, the suppliers of the companies like Tesco and the previous panelists which have been here. I think they have a certain experience with this, that not many of the suppliers are, in Slovakia especially, so much taking care about this topic.
Okay, and Daniel, on your side as a venture capital and in general capital markets, so how do you see, what's your role in supporting, in creating a market for green investments?
Well, first of all, thank you for having me here at this conference, and I'm actually pretty pleased that National Bank of Slovakia is doing this awareness kind of event, because that's the most important one, we believe. Crowdberry is a kind of growth capital ecosystem. We mobilize capital for SMEs and also venture capital fund, which is investing in startup companies. And I would like to, before I answer to your question with one sentence, put it into perspective what is actually happening here. I mean, the nationally, NDCs, national determined contributions of Slovakia, is actually 35% reduction of CO2 till 2030, if I'm not mistaken. And climate, I mean CO2 neutrality till 50. And that technically means to mobilize 8 billion euros till 2030 and 200 billion euros in 2050. And that's an immense amount of money, and without awareness, I mean, all the parts that the money should put together will not move. It's for just for a kind of comparison, the 200 billion is like 5.7 or 6 times the annual budget of Slovakia. So immense amount of money to reach the goals. But what we see, and that's the answer to your question, is that no one really actually cares that much on the SME sides and on the investor sides. I mean, everyone will say, okay, it's important, we are aware that the climate change is happening, but at the end of the day, I will have to borrow a sentence from the gentleman from Volkswagen who said, I mean, if someone cares, in 2 years he's bankrupt. So no one is doing that much just yet. That's what we see in the Slovakian and partially Czech market.
Can I have a follow-up question for you? And there is a part of what I was showing before, that the Slovak firms see less the upside. What we see in other markets is that there are a lot of startups coming up with green tech and new ideas, new projects, etc. Is there a fertile market in Slovakia? And if you see one of those companies, what do you tell them to do?
Well, I mean, I would just split it into this growth capital and the venture capital part. The venture capital part, there are business models which are emerging in this area, and they're trying to help the companies to converge or to transition. Yet, as the demand is relatively low, they really struggle to find the customers in the SME space. And the large caps, they try to work with them, but they will never incorporate them so deep that they can build up the business model based on that. In the growth capital side, I mean, the SMEs are trying to, at least from the facade, work on the waste. It really confirms your questionnaire, I believe. Everyone is taking care of the waste because they think this is the problem in the climate change, number one. and also trying to use marketing tools to create some kind of sustainability awareness around the company. But it's not embedded deeply in the business model because the customer doesn't require it yet. The local customer in Central and Eastern Europe. This is why a lot of companies that we have actually seen or financed or invested in are basically moving to the Western Europe because that's where the awareness is there and the customer appreciates it more.
Okay,
not good news, unfortunately, yet.
But that creates a problem on the transformation side of the industrial ecosystem in Slovakia, because then you don't have this innovation coming up from the bottom up. On the public sector point of view, what do you think is your role in guiding? And do you think you should guide this net zero transition or accompany it? Whose responsibility is this? Mm-hmm. Do you feel it's your responsibility on the public sector?
Okay. I will start basically what I perceive that in Slovakia, all green investments are EU-driven. The regulation is coming from the EU and the financing as well. So when we take the proportion of national financing out of all in the overall envelope that is going to the green financing, it's relatively small compared, for instance, to neighboring Austria or to Western countries. So meaning that the EU is also determining in which direction the money would be flowing. When we were negotiating recovery and resilience plan, for us, green investments were also sewage system, water pipes, so meaning 20th century, I would say, areas, while in Western Europe, it was more oriented towards climate, so basically hydrogen, how to boost electricity networks, how to boost renewables. So this was already the first discrepancy that we were seeing in negotiations. I think that the money that is coming from Brussels is also setting its own rules. So meaning that if we would like to get the money, we need to accommodate to the rules that are coming attached. So I think that the Recovery and Resilience Plan is the most environmentally conscious and climate responsible program that we have in Europe. I think that the next the structural funds that are coming are following more or less the logic. So all investments that will be done under the EU rules would be basically based on very strict rules. And for instance, we are now facing a concrete situation with the obligation to recycle 70% of construction waste. But nowhere in Europe this is regulated, or there is a framework how it should be done. So for us, when you look into the details, I think that we are far advanced with the objective, but we have not fixed all the framework, and we are doing it in the process, which makes the process more difficult. Then there is this sense of urgency. In particular, we see it now for the Recovery and Resilience Plan and to the latest edition, Repower EU, that you need to do very ambitious investments in a time frame of 2-3 years, which, according, I would say, to the experience that we have from previous year, it's not possible. So what is coming with it, it's also the pressure to improve the regulatory framework, to speed up the permitting process, to do, I would say, less bureaucratic rules. But then on the other side, we see when auditors are coming from Brussels that they are requesting more or less the same that they were requesting in the past. So I would say that from the practical experience, it's very difficult to combine, I would say, the very noble objective with the strict rules that are applied at the background. Anyhow, coming back to your question, I think that all this EU money is also contributing to the, I would say, public awareness of the issue, that this is an important topic because the whole Europe is putting too much pressure on it. And I think that as we would like to be like our Western neighbors, and we would like basically to converge to the EU, we are also taking in the logic that we need to be greener, that we need to invest more in climate and environment.
No, that's a very interesting to hear also the public sector perspective, also because I think there is really a strong rule of public investment in creating the way for private investment to come. So the public investment can be the driver for the more private investment to come along. So that's a very important rule. I wanted to switch to one of the topic, to another topic. That is, I think in the slides I was showing, there is no, not anymore, before. Okay. There was something coming up both from the public sector and from the private sector and also from the financial sector, I think. That is the issue of skills, lack of skills. What are you doing in your own institution and your own context in terms of skills development? And so first of all, Susanna, you were already mentioning that skills is an issue. What are you doing in your bank in order to develop those skills? And then the same coming to the other two.
Okay, so basically to build this specific type of skill needs definitely quite a long time and intensive training. But the point which I have mentioned in previous part is really crucial in my opinion, and I will repeat it. It has to be top-down driven, or it's I think really very good example how it should work. Although in case of our company, the first, let's say, drive, active drive, let's be open, came from our parent company. In our case, it's the Austrian Banking Group, and we have been one of the first signatories of the Paris Agreement. And basically, the rollout and drive was coming out from that side. On the other hand, we are already required to do ESG scoring and to provide data in structured form. And in case the data should be provided to the regulators in a proper form, you have to have trained staff. So be it webinars, various type of conferences, special teams dedicated, of course, to this topic solely and only. This is only one part. But we are extremely active, for example, in green buildings and real estate finance, as one example. But unless you do not know what to tell the client and you do not have the skill, you will not succeed in selling the product. So it is basically already incorporated in daily lives of not only sales staff and risk managers who are incorporating the ESG risks into the risk models, but I would even say, maybe it's too brave, that there is no employee in our bank who is not aware of the topic and who has no skills in one or the other field, be it facility management, marketing, education. So it has to be complex through the company, and more or less currently it's already on daily basis. Either some podcasts which are not maybe long, but it helps because then you have the focus, you have the message, and this is one part. The other part is, of course, external environment, which are our customers, and also maybe cooperation with public sector, private equity companies, etc.
Can I ask something that is related partly to the skill part, but also on how you incorporate into your daily business as a bank climate risk? How much is it the exposure to climate risk, both the physical risk and the transition risk, already priced in your lending, in the credit risk metrics and in the pricing to the final clients? So are you already penalizing in terms of pricing a company that is in a hard-to-abate sector and is not transforming, or not?
Actually, not penalizing yet, I would say it this way, but providing more beneficial conditions towards those who are green already. One thing is, and for example, 5 years ago, I think not many of us in the auditorium would think that we can have in place KPIs like ESG-linked loans. We would most probably focus solely on the credit risk part, like debt to EBITDA ratios, etc. But we have been also one of the first banks, or actually the first bank on the market who granted to the state company loan with ESG element. And the bonification here comes only after the certain target of reduction of CO2 emissions is reached. So this is the concrete example. Of course, new products are being developed, and exactly like you have said, incentivize those which are green or are doing green projects, reducing climate risks. This is the topic. And anyway, in the future, it was mentioned also in the morning, once you will not be green, you will, for the time being, be able to be financed, but maybe in 5 years it will be much more difficult. So we all have to accommodate to the current and new situation, which is very good in my opinion.
And Daniel, on your side, what are you doing in these skills? So for you, it must be super important to have the internal skill to understand which are the good technologies that will develop, etc. So what do you do inside your institutions to build the skills and...
Well, we are the seekers, you know, seekers of skills of the companies that are actually coming with innovation or technology. And that is very important to identify as you're looking in the relatively distant future, how that kind of skill of the founder or the skill with some of our team members, which they have to come together if an investment has to happen, will transform into a successful business model. I mean, one of the examples is Sensoneo. I mean, some of you maybe heard of that company, which is basically growing into a global company on a small scale still. They're managing waste management systems for cities and digitalizing the whole waste management processes. Plus, they're also running the recyclation system in Slovakia and very soon in Malta, I believe. And that actually happened 5, 6 years ago when we were looking at the company with a couple of 100,000 euros of sales, now reaching millions and millions of euros. And those are the skills that, I mean, this is a very, let's say, vague word, skills. What is a skill? I mean, in what kind of sector, what kind of qualities, what do you want to achieve with a skill? So in terms of the transition and climate awareness and the technicalities, for me, it's impossible to describe and answer to your question in a very pinpoint manner. But the skills in terms of the transitioning the business model into an added value for the climate issues and becoming a business model which really drives economic value is what we are looking for in the companies that we are actually screening.
And Olivia, it's not an easy question, but what are you trying to do on the public sector to develop the various skills that are needed to execute this climate investment? And I think at the central level and at the local level, how do you manage this reskilling of the public sector?
Mm-hmm. It's a question that can be answered in many ways. I will start with the recovery plan, that we have an investment in the reform of the school curricula, and that can bring, I would say, the biggest impact on the Slovak society if we include also this green awareness into the school curricula. We do not have upskilling and reskilling in the recovery and resilience plan. We are thinking of including it into the new chapter, Repower EU. But it will be really focusing maybe on some specific groups because you need to take the whole value chain from architects to the plumber when speaking about the green transition. So we are thinking in various terms how this can happen. In general, in Slovak public administration, I think that there is little awareness about the climate, about environment conscious. We are separating waste. And now we are saving energy, but not much more than that. So when speaking, I don't think that there is any standardized training for public servants, how you can tackle the green issues. So I think that there is still some scope how we can improve. Regarding my own stuff, when really I take the question in a very narrow sense, I think that we had a training on this, and also colleagues are quite active. They are thinking in advance what we can still improve. But I don't really think that this is happening at all ministries.
You make a case on energy efficiency, and there was very much. I think when we were working and the report I was presenting, we were very much thinking like, okay, high energy cost will be a driver for transformation, and everybody will massively invest in energy saving measures. But then you see part of it, but you still see a lot of uncertainty coming in and a lot of mixed signal on the fact that whether the high energy prices are going to stay, and then, okay, they converge, but what's happening, etc. Do I really need massively to go to energy efficiency? Do you think that the Recovery and Resilience Facility Fund are really making the change? There is a massive move in this direction, or there is still like, maybe I wait, or what's your take?
Out of the 6 billion euro that we have in the Recovery and Resilience Plan, 2.7 are going to buildings, either construction of new buildings or reconstruction of existing buildings. And we have several calls open regarding buildings. One concrete experience from one of the calls that is directed at municipalities. Even though there is no co-financing needed, not all types of costs are eligible. And we see that if municipalities are requested to pay a certain proportion of the cost, in the past it was normal, because even in the structural funds there was a co-financing of 5 to 15% or even more for the Bratislava region. Now with the inflation pressure and with fiscal changes, it's becoming an enormous hindrance to get some money out of their own pockets to complement what they are getting from us. So we are trying now to redesign the scheme in order to make most of the cost eligible in order to make investment happen. So it's not necessarily, I think, linked to uncertainty, because I think that they really see the need to invest into their own building, because they see that this will be beneficial for them in the medium term or maybe even next year, but they just don't have financial resources because they need extra money to pay salaries, they need extra money to pay energy bills, and for investment, this is the last category that they will be using the money for. So this is what I see as the first consequence. Then regarding various, I would say, processes that are happening, we see it as a real hindrance to quick progress, because if you need to spend maybe 6 months in getting the call up and running and close it, then you need to do the public procurement for the construction. You need, in the meantime, to get all the permits. And just for the paper phase of investment, you need 2 to 3 years. So out of the whole period of the Recovery and Resilience Facility, this is taking almost half of it. So then it's, I would say, very time restrained for really the construction phase. And it's not just our Slovak experience. When we are exchanging with colleagues from other countries, it's the same. That in the Recovery and Resilience Plan, we have just half the years that structural funds normally have at their disposal, and also the preparation phase was very quick. So compared to the structural funds, it was maybe 1/3 of their normal length. So that's why we are under extreme pressure to deliver on anything that has something to do with construction, just to tell you the truth. And this is the uncertainty that investors are taking into account.
Okay. And Susanna, what do you see in terms of this energy efficiency coming? Do you see it coming to the banks as well, or?
Yeah, sure. It's definitely coming. It's here. It's not only coming. We see, especially after this crisis, much more increased demand for financing the alternative sources of energy. Good sign is that it's also more in SME and mid-market sector, so not only with the larger corporations. So this is the daily impact. On the other hand, frankly speaking, because you have been talking about the obstacles of financing after COVID period, this shock also caused that also in our industry, of course, we have been first taking care about the credit risk. We have been concerned about what will happen with the borrowers. Ratings were supposed to really be downgraded. And it does not mean that we have not been taking care about this climate part, but this was much more intensive to look after our portfolio and to, of course, help the companies to overcome the pressure coming from this situation which appeared. But definitely demand is growing, and we even have special teams, energy efficiency teams in our bank locally, of course, also international teams. So it's definitely one of the priorities and priority sectors as well for us.
And Daniel, on your side, did you see some acceleration related to the energy crisis on climate investment or no?
Well, I mean, the energy efficiency discussion is here before this Ukrainian war and before this kind of inflationary period. But we are more or less focused on asset-light, let's say innovative human capital business models, to be very frank, where the energy efficiency certainly is not neglectable, but it's not the most important part of the whole business model. What we are actually trying to understand is how the customers of the companies that we invested in are thinking about the products and services that they are using from the companies we invested in. If you're, yes. I didn't get you lost. Huh? So because it's, I mean, we also heard it in previous panels that the energy structural issues in Slovakia is not that severe. Those are the other parts, the heavy manufacturing, the transportation, logistics, etc. And this is where I think in the next coming years, where we will launch our next fund, we will dedicate some part of the capital to look at the business models that help the SMEs to transform. We haven't talked much about the SMEs yet, but you know, it's 75% of the employment in Slovakia. It's 55% of GDP or something like that. So this is where really a lot of, you know, intellectual or human capital should flow, and the transitions will happen in the other part in the energy, because it might happen that the energy will be cheap again. Yeah, I don't know. I mean, no one really knows nowadays.
Now you exactly introduced my next question, and then I go back immediately to you. I wanted to actually talk about SME, and particularly, I think there is an SME issue. So how this flow of awareness on the climate risk, etc., it comes to SME, and how to support the transformation of SME on the one side, on the defensive side, to adapt to a changing world, but also to take the opportunity for the new world. In theory, SME can be much more agile in transforming and transforming the business. So what do you think? How do you see the SME special in this context?
This is a nice reference that you did for the beginning of this debate, and that's the awareness. I mean, we are now going through a licensing process where we actually will follow the European regulation for this type of investments that we do. We mobilize local capital. And after the licensing process, we will prepare a special product for SMEs to help to finance innovations. And we are thinking about adding this kind of climate transitions to that, whether by lowering the required return or by actually increasing the amount of capital. This needs to be tested with the investors, and it's again the awareness discussion, because once the investors will appreciate that these kind of instruments exist and invest in them proactively, the SMEs will have them available, and the banks could co-finance, because we are actually working in equity part. So, but you know, the debt part probably will play a role there, also from our side, and we will proactively look for SMEs who really want to transit, and that's where the skills comes in. We will need to find people also in Crowdberry to help to communicate with the SMEs. So what can they really do? How the benefit could actually come in the future periods, because currently no one, as I come back to my statement, cares that much, to be very honest. Maybe I have a too, narrowed vision field, or I don't have enough observations, but this is what we actually see in Slovakia.
If I may add something that comes, and if I take out the chief economist hat and I speak about us, the EIB and the European Investment Bank, we have been looking a lot of how you can make SME more aware of the needs for the green transition. And one element that we find particularly valuable is that actually if you subsidize the energy audit in firms, most of the time the firm will understand the upside coming, and most of the time the investment is actually self-financing in the right timing. So that's something we are also looking at on the energy audit side to give awareness on the potential, particularly that's on energy efficiency side, but maybe somebody, that's a lesson to learn also for other type of climate-related investment. And maybe, can I ask, Olivia, on your side, on the public sector, how do you do with SME? Is it in your radar screen, the transition of SME, or in your policy toolkit?
We do not have a specific tool for SME in the recovery and resilience plan, but I'm not speaking for the whole government. So definitely in certain ministries, they have tools. In the recovery plan, we are focusing on large companies. There was a call on the decarbonization of companies. It will be closed in a couple of days, weeks. So this was the, I would say, biggest scheme that was oriented towards companies. Regarding SMEs, they can apply to various other calls that we have regarding innovation, but as mentioned, the skills and awareness are not that present in the Slovak recovery plan. They can be financed from structural funds, so I would say I'm not the right person to respond to the question.
And Susanna, on the bank side, of course, you must be caring of SME transformation.
Yeah, sure, but I have to agree with Daniel that really, even if we maybe do not want to listen to that, the fact is that this segment is really not yet aware of the topic so much. If you ask the companies, they really, most of them don't care yet. This is the important part. And here I think it's again coming our role, maybe in cooperation with the institutions like yours, supranationals, design, first of all, a certain type of programs. This is one part which is, anyway, the communication is going on in this respect. This is something very concrete. But let's imagine really that you are an SME company somewhere in the middle Slovakia, and you not only yet have awareness, you don't have capacities, you don't have language skills, you maybe do not even can afford a special audit because you do not have enough sources for that. So these are, let's say, topics to be addressed and discussed, I think, together. So yes, it is like that, but it's changing, and there are, of course, also, let's not be so pessimistic, there are a lot of good and positive examples, for example, in agro sector, when some of the companies are maybe prepared even more than we would think. So there are positive examples, and where I'm heading at is let's build maybe a kind of stories based on these positive examples, and let's combine the efforts and try again to educate and do something in this respect.
And then we get into the difficult questions. So and then one of the difficult questions that I have is for Daniel and Susanna, is to say, in front of the public sector, what do you need from the public sector? So what's the rule that you see in the public sector that according to you, would help much more investment in the green transition to happen? Is it a regulation, a fixing standard? Is it subsidies, incentive? Is it leading the way on their own investment? What do you think is most important?
Would you like to start?
Whatever. I mean, I partially named it, but we would be, of course, more than happy to maybe cooperate even more intensively in this data collection. Because in, let's say, talking about the real estate segment and the certificates, you can really click on and find something. For the other part of the industries, it's not yet available. So this is, I think, one very concrete part where we would welcome the support. But it's about, I think, also organizing similar type of events, maybe in a more joint webinars, whatever, in order to make it happen, because 21 billion euros until 2026 should be invested only in Slovakia, and we simply have to combine private and public sector money. So this is the comment from my side. We would be grateful for any kind of discussion, and data collection is the issue, the quality and structural data collection.
Daniel, on your side?
Well, the solution might be simple. The implementation is super difficult. That's at least what I believe, because the simple solution is there is a policymaker who actually committed 35% CO2 reduction, so he has to make sure that it happens and create path incentives or disincentives, it doesn't matter, that the companies will actually adapt. Example, I mean, if you have a dog and the dog does something bad, you might, I mean, it's politically not correct, hit him, or give him a kind of, let's say, sweets if he's doing the right thing. And this is what policymaker can do in a tax structures, tax policies, or exempts, or some kind of accesses to specific businesses or tenders, etc., etc. For instance, if you have a company who wants to invest in decarbonization of its manufacturing, why there is not some kind of incentive from the state on the loan that it takes from Tatra Banka, for instance, with the measurable outcomes? I mean, otherwise, there's no way how to make 35% reduction in CO2. There's no way. In 7 years, I believe, or 8. Well, so I think policymaker plays a big role in this. The European Union is helping a lot. I mean, without that, I don't know where we would be, actually, to be very frank. But also locally, there has to be someone with a flag and say, okay, this is going to be embedded in our political direction for next coming 7-8 years, and look at the policies in certain sectors, whether it's the capital market, whether it's financing or the banking sector, whether it's regulation in terms of product, services, or access to the markets. But implementation, impossible.
Before I go to Olivia, I wanted to leave the opportunity if there are questions from the floor. Is anybody wants to raise a question? No? And then you still can think about it maybe later, but otherwise I go to Olivia on the other side. Not only what you can deliver, maybe you can mention to that, but also what you want from the private sector coming. And on the other side, what do you think it's EU level and national level? How do the balance of the two work?
Okay. As I mentioned,
this was a difficult part of questions.
Okay, as I mentioned at the beginning, most of these green regulations are coming from Brussels. So the agenda is really driven from Brussels, and given the single market, it should be like this. So I'm not questioning it. I'm a former Commission official, so I am fully disclosing my past, and I think that this is the way how it should be done. At the national level, what we should do, and maybe what we have already done and what is missing. So what we should do, we do not have a single point to coordinate all this green agenda. And I think that in many countries, maybe Austria or some others, they have created combo ministries where they combine transport, environment, energy, and when they propose policies, they do it in full synergy of all these aspects. Here in Slovakia, we have maybe a very ambitious environment minister that is proposing a climate act it's maybe not in line what the Ministry of Economy would like to see, and definitely not what entrepreneurs would like to see, and vice versa. So for me, somebody that is having an upper hand and that is coordinating all these line ministries would be very beneficial in Slovak circumstances. Coming back to data, we also do not have national data regarding green economy, but each ministry has its own data. The Slovak Meteorological Institute has its own data. We have started now to share all this data, also together with the Ministry of Agriculture, as I see the colleagues sitting in the room, but it's still in the beginning. So I would say that a national database regarding data is definitely useful. And then the regulatory part regarding various permits. It's in the national hands, and this is something where we are at a competitive disadvantage compared to other countries, that the processes are just taking too long. So what we would like to include in the Repower EU chapter is a reform of the permitting process, meaning the environmental impact assessment, meaning also various other environmental permits. The ultimate goal would be to have go-to zones where you can invest in renewables, but also other types of activities. And this would make the Slovak business environment much more attractive compared to where we are now. So this is one reform that we would be proposing in the Repower EU chapter. Coming also back to data that Zuzana mentioned, that we do not have data regarding public buildings. And we were taken as a surprise by the need to reduce energy consumption in public buildings when there is no inventory of public buildings, where you don't know what is the consumption of its building. So we would like to do passportization of public buildings in order to start collecting data, and maybe even as an ultimate goal to have a central body that is managing public buildings in order basically to make it in a most cost-efficient manner. So these are, I would say, out of the blue, the main elements that I think that the public sector should be doing, and we would like to propose some reforms going in this direction. What I would be quite happy to receive from the private sector, or what, in my view, the private sector should be doing. We have received several proposals from NGOs regarding what they see as important elements of the reforms and investments for the Repower EU chapter. I think the industry should do the same, that as the time frame is very limited for us to propose the Repower EU chapter, we will not have time to do a proper public consultation, of course. We will go into the inter-service consultation, but that lasts 2 weeks. So meaning that if you would like to be part of the debate, if you send us your proposal, or if you even go public with the proposals, that would be beneficial. Also to steer the debate towards the most, I would say, important elements that either banks or industry or whoever in Slovakia sees in this respect. And then many of these reforms, they will have political costs. And we have already seen it in pushing through reforms under the Recovery and Resilience Plan. And for us, support from the industry, from entrepreneurs, would also be instrumental in getting through all these reforms, because there are always groups that are lobbying against, and mostly these groups are concentrated and they are lobbying very strongly against. So if we do not have voices that go against this pressure, it's politically very difficult to go to the end of the road and push through a reform that makes sense. And it's not just fulfilling the minimum that we have in the milestone that is legally binding to get the money from Brussels.
I think that's a very ambitious and comprehensive view of the role of the public sector, so extremely interesting. I'm very pleased to hear about that. I think I'm looking at the timetable, and I think we started a little bit late, but we eat already 10 minutes from the coffee break, and before being killed by the rest of the audience, I think I would like to ask a last question that is more for fun. Your real. How do you think Slovakia compares? Are you happy or not to the rest of Europe? Do you think you are leading, a laggard, very laggard? And,
do you need an answer?
How do you compare? And so.
I mean, there's a lot of enthusiasm here. And that's where it stops. Generally. No, but I mean, just to be fair, there are islands, islands, but and if you, again, look at the data, we are actually 0.1 or even less than 0.1% of all CO2 emissions worldwide in 2023, and we will be the same 0.1% in 2030. So I think we should try to get those islands and create case studies out of it and becoming kind of role models for others to inspire who can really move the needle. Because to change the whole kind of psychology and society in a short time frame, which is 7 years, is impossible in this country. So we probably need to take a little bit longer span for that. So, yeah, that's it.
Susanna?
Fighting.
Yeah, difficult to add something. Daniel really covered it all.
And just to be optimistic to end the debate, we are performing quite well regarding the delivery of the Recovery and Resilience Plan. We were the 5th country to send the plan to Brussels. We were the 3rd one to get implementation rules in place. And now we will be the 6th country to get the 2nd request for payment approved. So I think compared to the EU average, but also compared to our neighbors, including Austrians, we are the top performer.
That's very good. And on this positive tone, I think I close the panel, and please join me for a very big thanks to this fantastic panelists. Thank you.
And thank you very much to the chair of the panel, Deborah Revoltella from European Investment Bank. Thank you very much for being here. And also thank you once again to our panel for being here and informing us. I hope that this will be the more positive part of our today's discussion. The last 3 minutes, maybe. But thank you very much. I was surprised that we're a bit behind in education, in having enough skillful people to get us towards the greener future. But we'll see. Hopefully, we will all work on it in the next very, very, very soon future. Thank you very much. And as Deborah already mentioned, we have a coffee break planned for the next probably half an hour, so 15 minutes after 3 we will be back. If you would like to be back, come back and we will have another panel discussion. This time we will be discussing the impact of building sector on global emissions. Thank you for being here, for paying attention, and see you in probably half an hour. Thank you.